All right, so we just mentioned Walmart reporting its earnings coming up. What are your expectations? Now, I want to ask you, the estimates are for about 4% growth in same-store sales, and then similar numbers for the current quarter, which of course includes the holiday season. In your mind, in this climate, is that good? Is that good enough?
You know, it really is in this environment of a generally tough retail environment. I think for Walmart to be able to post approximately 4% comp sales, as you stated, and looking to do that next quarter as well, you know, that really is indicative of their quality and value and how they're able to do that. And you know, what's really important, what we really want to see in this report is, what are they seeing for that next quarter? When we came in the prior quarter, it was almost a universal statement regarding the consumer overall, and there was a lot of stress, a lot of concern, and maybe that consumer was hitting a wall. Now, this quarter's been a little more upbeat. Companies like Amazon, companies like Deckers, and even McDonald's came out and said the lowest end consumer is starting to show a little bit of positivity. But what Walmart does the best, and what they're able to do extremely well, is manage cost and provide that value for all types of consumers. So to put up a 4% number, I think would be solid.
All right, so you think those same-store sales are solid right there, if they're able to meet those estimates. I also just want to talk to you just about their grocery business. That's obviously become a bigger and bigger part of Walmart's business. Do you believe that the growth that they're seeing there, is that sustainable as we go into another year and other competitors are trying to get into that business? There's also a lot of, competition, very frankly, from delivery services.
You know, it is a tough business, you know, when you look at grocery business, low margin business overall, but that's where Walmart can excel. They are continuing to garner market share. It's about 60% of their U.S. business. And you stated it, there's a lot of competition, but who really wants to compete with Walmart when it comes to their logistics, when it comes to their footprint of overall buildings? And that's where Walmart can continue to excel. And we saw Amazon try to step in this business a while ago, and they really struggled. So I think Walmart being able to generate more and more market share as they get people to come in, that means that higher end consumer is actually going to spend on the grocery business as well. And so they can sustain some of this growth rate. And it's indicative of how they're capturing market share from numerous areas, e-commerce, grocery, and even some of the digital space. And that's why we like Amazon, or excuse me, we like Walmart right here.
All right, so you like Walmart right here. It's interesting that you use that terminology right here. The stock's up about 63% year to date. It's trading at about 33 times forward earnings, more than twice its big rival of Target. When you say you like it here, would you buy more here, or are you holding here? How do you view the valuation?
Great question. That's one we get quite often. When you get a company like Walmart up 60% on a year-to-date basis, it's obviously eye-popping. But we still do like it. We aren't going to add here, but at the same time, this is the epitome of a company you want to hold. And if you look back historically, what Walmart provides is goods and services that people need. So when you're paying 30 times for a tech company, let's say, or maybe an industrial company, and we're in the economic environment that we're in, and if we go into a downturn, they're going to experience significantly more demand destruction. Now, Walmart, we go into a downturn, that's even where they excel even more. So paying that 30 times or 30 plus times multiple on a forward basis, we feel a little more comfortable with that when we're talking about Walmart. But you're right, the question is, do you add here? We don't think you add here, but this is a definitive hold, and it's one of the core positions in our portfolio, and we like it that way.